Corona, crude oil in the commodity markets, an economic fairy tale? Torsten, Corona, crude commodities, it looks really crazy. And so what's going on now with economy and the stock market?
I named it an economic fairy tale because what you see here is a huge divergence between the economic reality and stock market valuation at high. But you see in the economy, GDP figures dropping down. You see a number of unemployment, probably a little bit sophisticated when you see lots of people still in the working process, but on government aid and government spending money and rotating the printing press like hell.
Yeah, this is unbelievable. This is probably also why gold now moved up such a big time. We see already here the GDPs of Spain, Great Britain, Europe, etc., Germany. That looks disgusting, to be honest. Do you expect Q3, meaning this quarter now, to be going a little bit better and maybe Q4 better? Or do you think, maybe a second wave is coming and it's getting even worse?
So it's very hard to say. So what you see here is the forecast for and some of the realization for the second quarter. It's not such a pretty lady in red, what you see here, with a global economy going down more than 10%, some regions going down by 20%. We've seen UK going down by more than 20%, the US by more than 30%, and the average European number by almost 10% minus. So the key question is, do we see like now in Q3 like a V-shape to Q4 recovery? I doubt it. It looks like more like a mathematical route. So it goes up a bit, but with a danger of a second wave approaching here, we see like a double dip. And the double dip, what you see, the economy is not reflected in the stock market yet.
And the stock market is also our next theme. And you just said it already, V-shape. We saw a V-shape already at the stock market, but do you think this will persist?
V-shape in the stock market and when the sky was the limit, because this morning the S&P 500 and the future market is exceeding its all-time high, 3,400 and a little bit. So this is basically Corona didn't happen at all. You see the US market up to new highs, the MSCI World up to new highs, and European markets also closing to their highs. So at least having neglected all the minuses in the crash. And the crash has been very severe, minus 30%. And what you see in the chart, this stock market reflects no backdrash in corporate earnings or other economic indicators. It's basically reflecting only the money that's printed and being infused in the system.
Mm-hmm. Is this because they expect in the US also now negative interest rates, meaning like unlimited printing, helicopter money, and all the money goes into the stock market because there's nothing more to invest?
Yeah, that's probably the cool function if you ever worked as an equity research analyst. So you put like ever negative rates in your model, in your stock market modulation. You see like a discounted cash flow, discounted dividend model. You put negative and even more negative numbers in the model. Somewhere it has to be a stop, but if interest rates are falling, it justifies at least mathematical higher prices in the equity markets, but not fundamentally. Because here you see like the huge divergence, corporate earnings are coming down, and one of the only few supporting arguments is the backslash in negative rates. And by sure, the current president in the US is targeting negative rates, or at least zero rates, to fund like $3 trillion more debt, right?
Let's talk about crude oil, because you were saying already negative, and it was for the first time in history we had a negative price on crude.
From this point of view, amazing development, because you see like commodities are real assets, and one of the arguments is, look, a share price can fall to zero, a bond can fall to zero, a government can default, but a commodity will always have a price, right? And then it has a negative price in case of crude. This was very amazing for like a very short moment. So for the hot hands, what you see in the markets, you have a hedge fund, they're getting burned by this development. If you're a medium to longer term investor, it doesn't make much difference, because the price was just for one session going down to minus 40. Now we're trading back to 40. This is still very low, below average industry production costs. So therefore, it means if we ever see transportation at a normal level ever again, it means we need a justified price about $60-65 again. So therefore, you see like a 50% recovery in prices that is not in the cards yet.
Fantastic. Now we come to my most loved chart, because you invented that, as far as I know. And commodities versus equities. And I think we are still on a 70-year low. I mean, gold, silver moved up, oil we just spoke about. But if you look at iron, If you look at copper on the move, zinc is on the move. So what is your thinking on commodities versus the equities? Do you think the equities have to crash, or do you think, no, commodities are really starting to ramp up?
When we think about the thesis that economic development is not reflected in the share prices, basically share prices are too high because they're not reflecting the real severe situation in the economy isn't only being upheld by printing money and negative interest rates. Commodities are a different story. You forgot maybe to mention the agriculture commodities. When you look back in the 70s, stagflation, no economic growth, but high level of inflation. It was like wheat, corn, soybeans that are like quadrupling and tenfolding in value in this time, besides the crude market because of a crude oil shock and other things. And the gold market was rising by seven times, 8 times in the size on that side. So there are some interesting stories in the commodity markets. You have very cheap prices, but you have cheap prices for a couple of years now, what you see in the chart, because the commodities are not moving up and the equity is being pushed up. So as a new investor, if you now see how to allocate money, would you like to buy like an overpriced $2 trillion Apple company or like the S&P market with a negative earnings growth? Or would you invest in companies that have like a severe outlook on their earnings? Or would you buy like a solid copper investment where you're making decent money? Or would you buy some agricultural commodities or like some other metals? So I see the case, I think, for commodities in the future looks quite bright.
And there we are already at the outlook for the commodity markets for 2020. So you are bullish on commodities, right?
I'm very bullish on the whole commodities because I'm very careful on the equities from this standpoint. I see that the equity market overshoot with itself in this development and needs to correct. And commodities are still cheap. And I have some fundamental, I think, good cases in terms of electrification, about digitalization, infrastructure, e-mobility, storage, so all the alternative energy that you're also invested in to become greener, to become CO2 neutral. And all these developments need some commodity-based investment. So that's a positive thing.
Absolutely, especially some copper, I would say. Super. Yeah, Torsten, thank you very much for this and wish you all the best. And I think we are talking quite soon because to me it looks a little bit like that a lot of movements are in the short-term future even ahead of us.
The bull market is coming, Jochen. Thank you very much.
Thank you very much. Yeah, ladies and gentlemen, that was Professor Dr. Torsten Dennin, the CIO of Asset Management Switzerland. And yeah, you heard it, very bullish for commodities, for the stock market, really not so bullish, but we see it the same way. And we believe also this decade is the decade of the commodities. So you probably should check it out. My name is Jochen Steiger, Commodity TV in partnership with Dukascopy TV. Thanks for watching us and bye-bye from Geneva.